Boom! What's up, Investomaniacs? It's your boy, Knight Rider. Today, we are talking about Five Below, one of my favorite retailers. Definitely if you're looking for growth. Currently trades at $122.68 per share. It's trading at 4.4 times sales and 47 times profit. So it's not exactly a cheap stock. However, if you want a high quality stock with a lot of growth and no debt, you're going to have to pay up for it. Now, first, let's talk about why you wouldn't want to buy this stock. It's primarily China. They source a lot of their stuff from China. And if the Chinese trade war intensifies, that is going to hurt the bottom line, at least short term. Now, personally, I think the benefit outweighs the risk. I think they'll be able to shift sourcing to other countries, non-China countries, and they'll be okay at the $5 price point. I think they're going to be able to shift sourcing a little bit easier than other companies like Dollar Tree that are exclusively at $1. In addition, Dollar Tree has like 14,000 plus locations as opposed to Five Below, which only has 750-ish locations. So it's going to be a lot easier. They're more nimble. They're smaller, they have more places they can go to source things. So I'm not super worried about it, although I admit it is a short-term thing that, could impact them. All right, now, what is Five Below? Who do they serve? They are primarily for 8 to 14-year-old boys and girls. They do lean more towards girls than boys, but hey, girls like buy more stuff probably, so that's probably a good thing, right? And the parents of those kids. This is a quick little map of some of the states they're in. As you can see, it's primarily the East Coast, not so much the West Coast. This is an incorrect number. This is from 2017. This is now 750-ish. And quick little note on California. They're going to be competing. They're very. They don't have many stores in California yet, but they are going to be competing with 99 cents only stores, which is a private dollar store chain that sells things up to about $15. That's kind of in the California, Nevada, and I believe Arizona area. So. I'm not sure how competing against that company will go. I think that they are sufficiently differentiated in the demographic they're looking for, and I think it'll be okay. But I am keeping my eyes open when they start opening locations in competing, where they're very close to 99 cents only stores. Here's a couple pictures of the Five Below. As you can see, it's a lot cooler looking than a Dollar Tree or a Family Dollar or a Dollar General or a 99 cents only store. There's a lot cooler signage and, the wording and, style and colors. It's just kind of a cooler, fun thing. As you can see, they also kind of did away a little bit with the traditional aisle boringness of the other kind of dollar store type locations. And they have these more center items, and then they have like about 270 degrees of items product on the side of it. When you walk through it, they're relatively small, like 8,000 square feet, but you feel like there's more space because there does feel to be more open space. It gives a pretty fun shopping experience, and it's mentally puts you in a little bit different space compared to like a Dollar Tree, where you just feel in it and you feel like, oh, I've been here before, I know what this is. All right, so next we're going to look at, this is, I should note here, this excludes distribution, buying, and pre-opening costs. So the average net investment for a new location is about $300,000. In the first year, average store EBITDA is $450,000. That's earnings before interest, taxes, depreciation, and amortization. The way I like to just think of that is that these stores are paying themselves off in about 8 months. They open a brand new store, and they have paid for that store in about 8 months, which is crazy, and one of the reasons why I like this company so much. They've also shown that they have the ability to succeed in places like New York Metro, Philly Metro, Baltimore, D.C., as well as kind of different demographics like the Rust Belt, Midwest, and the South. And this also just shows that, they have stores in urban, suburban, and semi-rural, and they're seeing success in all of those types of areas, which makes me more confident that they can continue to succeed on the West Coast as they are expanding. Right now, we're going to be primarily looking at some of the numbers, primarily the 5-year compounded annual growth rate, just to show you that they have long-term success in pretty much all the areas we're looking at. So net sales are at 25%, operating income is at 26%, net income is at 30%, and earnings per share is at 29%. Again, that's the 5-year compounded annual growth rate. So these are extremely impressive numbers. We're going to now be looking at same-store comps all the way back from 2007. You can see the comps are at 5%, 6, 12, 15, 8%, 7, 4, 3, 3, 2, and 6. So overall, we have fantastic same-store comps. Obviously, most of the growth is being driven by new stores, but it's nice to know that the existing stores are doing well in addition to that. Here, we are currently at about 750 stores. Management believes that there's roughly 2,500 stores, the potential for about 2,500 stores, which I think is a fair assessment. One little anecdotal way I like to do it is to compare it to Dollar Tree. In my area, which is one of the more established areas for Five Below. I live in Orlando here, and you can see it's one of their more established areas, at least in terms of brand awareness. They have, and they've been in the city for a couple more years than most places. They have 8 locations in what I consider Orlando, not like the legal boundaries of Orlando, but just as a resident, when I look at it, I see like 8 locations. In the same general area, there's 16 Dollar Tree locations. So obviously that means for every 2 Dollar Trees, you can get 1 Five Below, at least in Orlando. So if you expand that to nationwide, which you can't do, but if you do, you got over 14,000 Dollar Trees. Well, that's over 7,000 Five Belows. Now, that won't work because there's going to be a lot of places that can support 1 Dollar Tree, but cannot support a Five Below. So it's, it's kind of comparing apples and oranges. But the point is, I think 2,500 is a realistic number. So this here is a little example of where I think the competitive edge for Dollar Tree might be. I'm sorry, not Dollar Tree, Five Below. And that is around that $5 price point for cool things for kids to buy and gifts for kids. Obviously, if you want something for $1, you probably go to a Dollar Tree, right? If you want something for like $10 or more, or even like $8 or more, you'll probably go to a Walmart or to Amazon. But if you want something for like that $2 to $8 price point, you can't get it at a traditional Dollar Tree, and you can't get a whole lot at Walmart for under that $8 price point. You can certainly get some things, but not as good as the options you can typically find at Five Below. And at Amazon, your pickings get pretty darn slim under about that $8 price point, because the fact is they have to do shipping, right? It's like shipping is expensive. So there's kind of a minimum price threshold, and under that certain point, there's not a lot of options because the shipping is just too expensive. So this is a great example. You can get a micro RC quadcopter for $5. This is not something you can get at a dollar store. It's not something you can get at that price point on Walmart or on Amazon. This is something you can only get at something like a 99 cents only store, or a Five Below. So this is where I think there's a competitive advantage for Five Below. And I think that's everything in here. Oh, this last one I wanted to show you. So this is just their distribution centers. They currently only have 2 distribution centers. They're adding on 3 more, one in 2019, one in 2020, and one in 2021. I like seeing that because I know distributions are extremely expensive, and management teams will only put in place new distribution centers if they are extremely confident that they're going to see growth for years to come. So the fact that I see management adding, like doubling down on their distribution centers, that gives me a lot of confidence as an investor. And now we're going to look at their most recent numbers, which is January 14th, 2019, so just a few days ago. And we're going to be looking at they just released their holiday sales, their holiday numbers. And that is from November 4th, 2018 to January 5th, 2019. And you can see that they reported a net sales increase of 24.6% year over year during that same period, and comparable sales, that same store sales, increase of 4.9%. So the past 5+ years, we have great growth, great numbers, and the most recent numbers just reported a couple days ago are still fantastic. I love the stock. I'm a big fan for the time being until they get a little bit more established nationwide. I recommend it. Hope you guys have a great day.